Okay, I think we're just waiting for the live stream to come up, and I think RJ is going to kick us off.
Hey, Amy, are you all ready? All right, it looks like we're all set, Glenn.
All right, well, I'll kick it off. Welcome, everyone. Thank you very much for attending today's question and answer session with eXp World Holdings CEO Glenn Sanford, our CFO Jeff Whiteside, and D.A. Davidson's senior analyst Tom White. I will, after this introduction, hand it over to Tom for the majority of the session in terms of hosting a fireside chat with Glenn and Jeff. I'd like to direct everyone's attention to the screen on your left, which includes our disclaimers around forward-looking statements. We're excited to have you all here. This is our first time ever doing an investor question and answer session in Verabella. So look forward to answering questions. We have a Slido session set up, so please insert questions that you'd like to have answered that can be voted up. We will also, if we have time at the end, we'll open it up for Q&A from members of the crowd. So with that, thank you again, and I'll turn it over to Tom.
Great. Thanks so much, RJ, and I'm thrilled to be here. As RJ said, my name's Tom White. I'm a research analyst at D.A. Davidson, and I've had the distinct pleasure of getting to know the guys from eXp over the last couple of years. As far as the format, RJ touched on it, but I'm going to do kind of a little fireside chat session here with some questions to kind of get the discussion going, and then we'll leverage Slido and then maybe do a live Q&A at the end. The Slido tag is hashtag eXp Fireside. So you just go to slido.com and use that Fireside hash, and you can submit questions, and we'll take a look at those. So with that, maybe we'll get things started here. Glenn, Jeff, great to be with you guys. Jeff, particularly like the hat there.
Appreciate it. Thank you.
And hopefully you guys let me know if the feedback on my mic is an issue. But maybe just because we're here in Verabella and it's the first time you guys have done something like this in World, maybe Glenn, you could just talk a little bit about what Verabella is, how EXPI, came to work with Verabella, the acquisition, just a bit about the platform would be great to kick things off.
Awesome. Hey, thanks, Tom, and then thanks for your coverage and D.A. Davidson's coverage of eXp over the last couple of years, I think. So it's been going on for a bit, and so it's been great to kind of get to know you, and also just see the critical eye you look at, relative to numerous companies in the tech space, and us included. So Verabella, obviously we're in Verabella now, and this is our auditorium for those of you on the live stream. But Verabella is a virtual world for work platform. It was actually originally developed back in 2012, 13, 14, really for distance education and leadership out of University of California, San Diego. Alex Howland, who's the president and founder of Verabella, he started it as a part of his PhD doctorate program, and we discovered it in late 2015 and looked at it as a replacement to a platform we'd been using prior to that. There's been the virtual world for work environment has been around in some form since mid 2000s, 2005, 2006, 2007. Really got popularized at one point because of the Second Life back in the day. There were a number of virtual world for work platforms that showed up over the years, and the unfortunate reality is most people didn't realize how much of an enabling technology for remote work these types of platforms provided. However, back in 2009, eXp Realty went fully virtual, and so we operated as an entirely cloud-based real estate brokerage. And for us, we wanted to create a sense of place and someplace we actually went to work and had conversations and those types of things. And so we went through a number of platforms, and we discovered Verabella again 2016. We became their number one customer, representing over 50% of their revenues by 2018. And given my passion personally around online networks, had built an online network back in the mid 90s, worked for AOL, had done a lot of stuff in that space. We thought it was a great opportunity to kind of merge forces. And so we bought Verabella. And we continued to invest heavily into Verabella, mainly for eXp's needs, but Verabella had a number of clients and still does in the DoD and defense space. It has been worked with big e-commerce companies. You worked with a number of universities. But obviously, since the pandemic has taken place, you can imagine the number of companies looking for really collaborative remote workforce tools, and Verabella has went from a team that was about 25 folks at the beginning of the year to now we're over 75 people. Our client base has jumped dramatically as a result of people sort of discovering this new way of working that eXp Realty has been doing now for over 10 years.
Yeah, and Tom, I kind of like to add to that. I hear a lot of times people come up and we could do this on Zoom, and Zoom, obviously a great tool and a great communication tool, but we actually run a global brokerage end to end on this platform. So from customer support to accounting, the board meetings to everything. So we run our entire business globally on this platform, and as you can tell from the numbers, the growth is, it's phenomenal. And a big reason is because of the platform, and especially just what we went through. It's been so positive and so productive for us. So it really is a way to work. It's a way to run a business.
Great. And maybe just to dig in that a little bit, maybe you could just give some concrete examples of how your kind of rank and file agents, how is it that they're really interfacing with the world? I mean, are they, 9 a.m. Sitting at their desks, logging in and kind of keeping it online all day? Are they kind of tapping it for particular, things that they need to accomplish, be it IT issues or stuff like that? Just give folks maybe who aren't as familiar with it a more sort of tangible understanding of, kind of really exactly how this is used by agents specifically.
Yeah, so for agents, agents are for the most part listing and selling real estate. So a lot of their work is out where the people on the houses are, as opposed to being in a virtual world. But once they're back at their home office or wherever they're working, they if they need support or they need to attend a class or they're looking for a mastermind session on a particular topic, there's numerous reasons why they would come in world, but they wouldn't be in world throughout the day. We now have over 30,000 agents and brokers in 4 countries, and they literally will go to throughout the week to state-based, province-based, country-based meetings to really talk about the trends in real estate, how to become a better agent. What do they need to know about from a client compliance perspective, relative to contracts, et cetera. But then they'll also attend a number of other sessions that would be to sort of just recognize what's going on, or they'll run into people in world. We've had numerous water cooler kind of stand-ups that will take place throughout the week, including weekends, where people will literally say, hey, let's talk about listing presentations. They'll message on our workplace platform, which is our private label Facebook that we use. And then a bunch of people will jump in world and they'll start brainstorming on whatever topic it is that they wanted to brainstorm on. But if they need HR help, accounting help, they need help from their state or provincial broker, they'll literally jump in world and have those conversations, and it's much more efficient way to do things because they can actually see visually, who that person might be talking to, sort of where they're at, and then have other conversations around that rather than sort of just waiting for somebody to be available for a phone call. So it creates a much more social atmosphere to actually get the work done that you need to get done.
And Tom, I would add that just recently, from a use standpoint, a lot of the other brokerages had to shut down their doors. We didn't, and we actually used the opportunity to bring people into the world. And we had about 100 classes going on per week, training people and getting people up to speed on what they can do during this time period. So that was really effective, and that I think it helped a lot of people stay in business. And what we're seeing is we're actually growing through some of this as we get to the end.
Okay, that's great. Thank you. I definitely want to spend some time on kind of the core brokerage business, but maybe before we jump into that, just one more on Verabella. There was a really interesting announcement you guys made earlier this week about the partnership with looks like HTC China. And Glenn, and Jeff, hoping you guys could just talk a little bit more about that partnership. How did it come about? What does it mean for eXp?
Yeah, so I've been in conversations with the president, HTC Vive Alvin, for a little over a year and a half now. They've developed the Vive headset, and we've been building out, obviously, the Verabella platform as one of the most robust, in fact, probably the most robust virtual world for work platforms that exists currently on the market. And that was really, again, back to the eXp side. The HTC team was looking for a suite of services, some that they built in-house, but then others which are best of class, to actually build as what they refer to as their Vive XR suite. And so Verabella we're actually the platform providing the Vive campus, where consumers that are in China that want to actually go and actually experience this in China. It's all localized to the Chinese language, et cetera. They'll be able to do that. But in addition to that, the Vive XR suite is actually being pre-installed. I think the end of the third quarter, pre-installed on PCs. I believe HP's is the brand that they're being pre-installed on. So consumers that are actually will be buying certain brands of computers will actually have Verabella already pre-installed as part of that engagement. Of course, and then with that, HTC will be marketing our private campuses and team suites and events. And we've got a revenue sharing program that's a great win-win between us and HTC. We'll be supporting them by pushing some of the Chinese specific clients that we run into on Open Campus. And if you coming through the entryway, you might have noticed there's a number of people speaking multiple languages in that welcome area, because we're now attracting global use cases. And so we expect that that HTC deal could be very substantial. And China wasn't really a market we were focused on, but given the amount of enthusiasm that HTC has, we think it's going to be a big contributor to Verabella's growth.
Okay, I'm tempted to ask about eXp brokerage launching in China, but maybe I'll leave that for the future. Maybe just shifting kind of to the core business. Obviously the pandemic here is impacting a lot of different industries, and it seems from where I sit that the impact on the real estate sector has been one of the more interesting ones in terms of the apparent, resiliency, I'd say maybe is the word, in terms of buyer demand, and unclear kind of exactly, what's been kind of the most important factor kind of driving that sort of snapback that we seem to be seeing in the market. But maybe at a high level, Glenn, would just be curious to hear your and Jeff's thoughts about how you think the pandemic is impacting broader, U.S. residential real estate. What, if any, kind of long-term transformational changes you think might be accelerated or kind of put into kind of permanence, if you will, by the pandemic?
Yeah. So go for it,
Glenn.
Jeff.
Oh, okay. So, I mean, what I've seen, Tom, is, the industry historically has been pretty slow to change as a whole. I think what the pandemic has done is it's forced many brokerages and agents to kind of accept and implement some of the available technologies. So, and a lot of it's around digital. So contracts, payments, signatures, things like that. So I think that digital transformation will change it probably permanently as time goes on. You also see a lot of brick and mortar brokers trying to cut their costs. We don't have that issue at eXp, and I think that I think what it's done for us at eXp is kind of just shown how well the model does work. So we didn't miss a beat. It was interesting to me to see reading articles how even companies like Google were struggling to go remote. And so I think to answer the question, I think the digital transformation will be mostly permanent, but I think people are still going to struggle with the costs of the existing model as opposed to what we're doing.
Yeah, and just to sort of go off of Jeff's comments, one of the things that, and we noted this in the press release, even talking about this event that we're doing here with you, Tom. Q2 is going to be is shaping up to be one of our, if not our most profitable quarter yet. And that's really, I don't think that most brokerages are going to be able to make any sort of claim like that outside of us, because all of our costs to run the brokerage are effectively variable, meaning that we have no fixed costs that we have to maintain when the market slows down. And so you might have noted back in late March, early April, we made a hard pivot and made some staffing changes that we thought were necessary, given that we didn't know how deep this was going to go. And then we've since now been hiring back a number of those folks, hiring some also new folks in because of the snapback. But we have the luxury of not being impacted from a macro perspective, because literally there really is not a cost inside of our company that can't be thought of as a variable expense that can be adjusted on the fly based on revenue and expenses.
And I'd say, Tom, too, what we have seen is that a lot of the more productive agents have seen the value of the model at eXp, because we continue to do business, right? We're open for business. We're actually growing business. There's always kind of been a myth out there that you need offices to run a brokerage, and I think one thing that has happened through the pandemic is we've kind of shown in many industries that that's really not the case.
Yeah, and last but not least, I think you'd asked about changes in maybe even the landscape of real estate. Certainly, we're seeing the exodus from big cities that have been heavily impacted by numerous activities, pandemic being, of course, the biggest contributor. But we have a number of people that are now moving out of the big cities and then buying in the more suburban areas. eXp has been primarily a suburban-based real estate brokerage, so we're seeing a ton of business especially on the buy side of the business. Now we're more listing based than we are buy side based, but the reality is that we're seeing that big influx of buyers that are needing to find some place outside of the downtown New Yorks and Chicago's and other big cities. They're moving to more rural locations for because of what's been going on in the pandemic.
Okay, that's great. Maybe I'll ask one follow-up, and then we've got some questions from Slido, which I'll ask a few of those. Just on agent attraction, guys. Obviously this whole idea of working from home and working virtually and working remotely is being adopted by every industry under the sun, and including real estate. You guys have obviously been doing this for a very long time. You've demonstrated that you can scale and build a big business working virtually. So I'm curious if you guys think this is maybe going to be kind of an inflection point in agent attraction, as folks, as agents are kind of looking around for places where they can be productive in this mode. Any reason to think that any of your competitors might that there might finally be a real competitive response on this idea of kind of low overhead, low bricks and mortar presence? Your thoughts there would be interesting.
Yeah, so far they haven't given indication that they're going to go this direction. I watched some interviewing from the Keller Williams, from Coldwell Banker, and some other firms, and so far there doesn't seem to be a buy-in that this is a new normal that they're going to lean into. Now that doesn't mean that they privately aren't making adjustments, but from a public perspective, they're still promoting the fact that physical offices and are going to be the way that real estate is done. So right now, I'm not seeing any significant push from the major players. I think we're always going to see the indies, the smaller niche players. They're the ones I think are probably the most innovative because they get to start with a blank sheet of paper. So, so I think that we're going to continue to see really unique ideas come from the indie small brokers. They'll figure out ways to organize and to compete, and some of them will get traction, but I don't think we're going to see much in the way of pressure from our legacy competitors.
And Tom, to that point, our business model is structured as a single international platform. So we're one brokerage as opposed to a franchise. So I think that's another big piece that's beneficial for the way we go to market.
Okay, great. I'm going to ask one more and then hit to Slido, but I wanted to talk a little bit about the financial model as maybe a segue to some of the Slido questions that I see coming in. But was hoping maybe you guys could just talk at a high level about kind of the evolution of your financial model over the last couple of years. You announced recently that 2Q is going to be your third quarter here of GAAP net income profitability. Maybe talk a little bit about what's driving the leverage in the model there, and then what are the other big levers either on the revenue side or the cost side that will kind of continue that trend.
Sure. So our key metrics in the business: agent count, transactions, volume, revenue, gross profit, adjusted EBITDA, cash flow. They are our key metrics, and as you can see from the results in 2019 and over the last 4 years, all those metrics have just been growing, doubling, plus in almost every category. So, our key metrics and our growth metrics continue to drive higher. A couple of recent things that we did, and that was our goal, as we talked about at the beginning of last year, was to achieve profitability. And what we wanted to do was make sure we had the proper payout for rev share. All right, so that kind of got out of whack for a while, and we changed that back to that 50% level. And we've always, our goal was to get to our 10% gross margin, and we did that. That's kind of where we're trending right now. Last year was 8.6%. So I think the growth combination, just incredible scale that we've achieved, and when we look at the business too. There's a long road ahead of us. So I think we have our margins where we want them to be, or where we said we wanted them to be last year. So that's a big deal. And if you look at the growth metrics, they're all very positive. I'd also add too that big driver of our business is cash flow. All right, we have zero debt on the balance sheet, and the cash flow metric, even while we invest heavily in the company from a agent support, technology, marketing, events standpoint, but we do stock buybacks. We're still growing the cash flow year over year substantially. So there's really no need to go into any kind of debt situation. So they've all been very positive.
Okay, great. Maybe a follow-up on gross margins, and there's a Slido question here on that topic. The question is, would you guys think about breaking out the gross profit between the core brokerage and your various kind of attached ancillary products and Verabella? Hard to evaluate changes in the splits with it all mixed together. So I want to dig into some of those ancillary products in more detail a little bit later, but maybe just you could comment there on how investors can kind of understand the gross profit contribution of brokerage versus some of the other stuff.
Yeah, I'll touch on that. So right now, the reality is that these are all on a relative basis, very small relative to our overall commissions and the core brokerage operations. So at the point that they actually become meaningful and that we'll start to break those out. Right now, we certainly have, I think, the one that we're seeing, big uptick in business volume is on the Verabella side, but we're talking about something that, up until this year was primarily a service that eXp was using as a service offering for ourselves with a little bit of retail going on outside. But now we're seeing, what could amount to, a run rate that at the end of the year could be, $1 million a month or more of potential income coming from just that one unit that's high margin business. So I think we'll start to see some of these businesses break out and start to be shown on a more standalone basis once they sort of reach a critical milestone internally.
Okay, that's great. On the kind of the spike in interest in Verabella, there's another question here from Slido asking about whether there's maybe an opportunity for when Verabella is mentioned in the news or on a customer's website. There's rarely kind of a tieback or a mention of eXp that Verabella is getting this spike in interest that maybe there's an opportunity for you guys to similarly kind of increase the profile of the core brokerage business. I don't know if that's something that you guys are thinking about.
Yeah, I think that's part of the reason, why obviously we're doing this event here inside of Verabella and a number of the things that we've been doing more recently, trying to create the additional exposure for the two companies because of the sort of the almost disparate nature of the two entities, residential real estate and then virtual world for work. They're harder to sort of tie together relative to the way we think about press releases, but certainly from an eXp World Holdings perspective, tying back to the parent holding company makes a lot of sense, and certainly from a Verabella standpoint, eXp is the case study that is used with almost all of its customers because we are such a power user of the platform, and literally, if it wasn't for eXp use of the platform, it would not be near as robust as it is today because we literally broke everything as we scaled from just the growth of eXp on a virtual world for work platform. So we are tying them together, but to how we do it, we want to do it in a way that that makes sense, and sometimes it's a little tough to sort of pull Realty and Verabella together in the same marketing piece, but certainly eXp World Holdings, we can pull that in more.
And Tom, we did, as you know, we had our shareholders meeting in Verabella, And I'm pretty sure the latest number I saw, we had about 17,000 individuals visit during that period of time during that week, and it was very effective. And so we're getting exposure that way too.
I'm sorry, Jeff. 17,000. That was
Individual.
I think that was including the live stream. I think it was 11,000 in world, and total with the live stream. I think it was over 17,000.
Okay. A couple more from Slido here, and then I'll ask some. Can you talk about which agents fit best in eXp's model, and how does the value prop of eXp compare to legacy players when you think about splits and technology, fees, and costs? Sort of a high level question on kind of the agent value prop and what's the best kind of agent profile. As an aside, I'll say I think some people feel like maybe eXp is kind of a terrific fit for a sort of a well established agent, but maybe not as good a fit for somebody who's kind of just cracking into the business. I'd be curious to hear your comments on that.
Yeah, so I think that one, I think pandemic changed everything, and meaning that if I was to sort of if you were to ask this question back in November or December, in fact, you might have even asked this question when we were at your event in New York. I do think that there's a value prop for a bricks and mortar based brokerage for a brand new agent that to some extent is harder to solve in a 100% cloud based real estate brokerage. However, that being said, we've about 30 to 40% of our agents that join us every month are brand new, and through our training platforms that have developed from all of our great folks from Curtis Dixon on down, we literally have a super robust new agent training platform for agents. And given what's taken place in the world, this is for a lot of agents the safest place to actually learn the business, be around other agents, actually do sort of stand up the things that they need to stand up. So where I might have answered it, I certainly answered it differently in last year. This year, I think that with all the emphasis, we rolled out a huge training initiative on our Express education platform and made that available actually to the larger industry. But we literally have poured into new agent how to do all the parts of the business they need to do, and then with our mentor program and all the other things that we have, I think that we now are as solid, again, given the backdrop, as any real estate brokerage that exists out there for new agents, where I might not have said that last year.
And also, I'd say that above and beyond Verabella, the way that the model works is that we have some phenomenal teams out there. Brent Gove would be an example, where he has, they really act as support, and they train and they talk and they communicate. So you're not on your own. All right. So there's a lot of support throughout the organization for new agents.
That's great. Thanks. I'll ask one more here from Slido, and then I'll keep moving ahead on my side. This is a good one. How do you guys feel about committing to quarterly earnings calls? There's clearly an exciting growth story here, but maybe the lack of quarterly earnings process, is a factor in getting the stock going.
Yeah, it's definitely still something we definitely discuss internally. There's a lot of where we're probably not really geared toward is quarterly guidance, but in terms of actually doing some updates as to what took place during the quarter, I think that's a place that we're going to start to move towards. So, to some extent, this is filling in the gap for those types of calls, but start to do some updates as to what took place in the quarter, but probably not provide much in the way of earnings guidance, partially because we're still growing so fast that even, us keeping track of exactly where we're going to be in a quarter or 2 quarters, still a little bit tough for us to sort of understand exactly. I know a lot of companies actually quit doing quarterly guidance over the last quarter or 2 just because of everything that's going on, and hard to hit numbers when you've got too many uncertainties out there going on as well.
But we definitely are getting closer, and in the short term, I think we can talk more about our growth plans with more details behind them, whether it's international or it's commercial or whatever whatever we're getting into the affiliate services. So I think we can communicate more, Tom, and I think we will.
Okay. Great. Maybe I'll ask one more on kind of the core brokerage business, and then I want to dig into some of the ancillary services. Just on kind of the size of the agent opportunity that you guys see in the U.S. You recently crossed 30,000 agents. I think the vast majority of those are kind of U.S./North America. Any change, Glenn, and you're thinking about how many agents you guys think you can get to here over the next kind of 5 to 7 years? Just curious. I know you've had ambitious targets about that in the past. Curious, if the pandemic kind of emboldened you more on those targets, or if there's any change in your thinking there.
Yeah, so domestically, I don't see that our trajectory's changed that much. The idea that we've continued to sort of talk about 100,000 agents in the next 4 years or so is still very much in the thinking relative to North America. Probably the game changer for us, and Jeff, you can certainly comment to this, was the recent addition of Michael Valdez to lead up eXp Global. He led that initiative over at Realgy, and to say the least, he didn't come in here to just add a couple agents to the international profile of the company. He has very ambitious goals, very big goals, and and we think that even in the short run, there could be some nice announcements that come out of just his engagement in standing up a number of international markets. So, Jeff, any?
Yeah, definitely want to talk about international, but I guess my input on the U.S. market was, we're at about 31,000 agents right now, primarily still based in Arizona, Texas, Florida, California, North Carolina, and Arizona. All right, so we're really just scratching the surface in the U.S. We're starting to grow more in Michigan, Georgia, New York, New Jersey, Virginia. So my point on this is really we have quite a long road way to go in the U.S. alone. So I think Glenn's number of the 100,000 we feel very confident on, and I think the other thing that we're seeing happen in the U.S. business is that as we have attracted recently some really strong producers, top 20, top 10 producers in different states, and some new states for us. Or states we're starting to get some more traction in, they're starting to grow teams. That's how the model works. So we believe that this is gonna take off in the U.S. for sure. And then on international, Michael, he came from a place where they had 300,000 agents and 120 countries. Currently are in 3 countries, and we do plan on growing in all those 3. Plus, we can see quite a addition to the number of countries we're in within the next 12 months.
Okay, great. Well, let's talk about international a bit more. Maybe you guys can just give a quick overview of the provinces and the countries that you guys have launched in. If I remember correctly, I think all of the international markets are English speaking. So I'm curious about when you guys or if you guys have any plans or are close to launching in non-English speaking countries, and then I kind of want to mention China just because of this HTC announcement. Is that ever a market that you guys would kind of prioritize in terms of expansion on the brokerage side of things?
So language wise, obviously primarily English speaking. At the moment, we have a pretty good contingent of agents in Quebec and a number of French-speaking agents there. We do have a few countries that we're currently looking at: Brazil, Portugal, and some. I think France is in there in the mix as well. So we've definitely got some countries that are non English first countries, and China certainly will likely happen. We've had definite interest from folks in China, but now that we've got some expertise on how to actually stand up international markets, I think the likelihood of China actually happening is much higher. It isn't one of our top tier or top countries we're going into right at the moment, but it's a huge country, and I'm sure we'll get there.
Yeah, we're focusing right now, Tom, on the countries that have the best or the most potential for launching with big influence. All right, so these are we're going for larger launches, and that's kind of what Michael's been spending his time on. So some of the countries Glenn mentioned, they are definitely in the mix. We can see really growing in the three countries we're in: Canada, the UK, and Australia. And we can also see somewhere in the neighborhood of 10 new countries over the next 12 months or so. And that's kind of our North Star goals that we're looking at right now.
And it looks like, I think we're even making some traction in potentially opening up Mexico. So that's hopefully not too far off either.
For sure.
Great. Jeff, you mentioned kind of going in with a big launch. I guess, can you just talk a little bit about how you think about go-to-market for international, and maybe kind of contrasted versus the U.S. market, where, maybe I wasn't covering the stock at the time, but, it didn't seem like there was necessarily sort of a big launch. It kind of was a slow burn until it really started to, sort of the network effects, if you will, kind of started to kind of fire, and you guys really picked up steam. But just curious how the go-to-market might be different in some of these international markets, or maybe it's not.
Yeah, I mean, I think the strategy is we did start off relatively slow because we went into the UK and we went to Australia primarily to prove that the model works and that the software works and that we are ready to go in different international countries. And what we're doing now is a combination between our agents, their connections in countries, and then also now that Michael is in that role, the connections that he has and the connections that our agent have, we're going for the countries that have the most opportunity to grow faster. So and what we found in countries, and Glenn, maybe you were over in Australia for quite a while. We want to make sure we are connected with the major influencers in these countries, and that's our major strategic play here, is doing that, and we have quite a pipeline of that as we speak. And then the other thing we're doing from a technology standpoint is we know we can't scale as fast as we want to scale doing the things we're doing right now. So we're looking at different technology solutions to make sure we get the proper control and the proper data to be able to launch our model in these countries. And so we're just looking at, from an operational standpoint, things differently so we can scale faster. And as Glenn mentioned, Michael has that kind of experience. Plus, I mean, we've actually, most of the people we've brought on, and I'd like to get to that at some point in time, have international experience now. So most of the new people that we've brought on in the business, the leadership has worked globally. So I think that's going to help us a lot to scale faster. Okay.
I mean, do you guys think international, like if we looked out 5 years, I mean, are you guys thinking that it could be, 25, 50, maybe 50% of the agent base, or, how should we think about that?
I believe that it's going to be a big contributor. What percentage, I wouldn't want to commit to at this point, but if Michael's ambitions match up with reality, it could be 30-40% of our agent base.
Yeah, I could see in the short term, Tom, the next 12 to 18 months, it being somewhere around 15%.
Wow. Okay, that's great. Maybe just moving on to some of the other kind of ancillary offerings. Specifically, I want to talk about mortgage and the title insurance products. Some innovative, interesting things that you guys launched there. Curious if you could talk a little bit about kind of attach rates for those. Specifically curious whether the pandemic might be boosting attach rates for things like mortgage or title. Given it's just easier for home buyers to kind of interface with one person. I mean, it's always been easier, but it's particularly easier when you don't want to interface with anyone. So maybe just talk a little bit about that, those two products, and then also their impact on the model and on margins. Am I right to think that that 10% gross margin target you guys put out is really on the core brokerage, and that if stuff like mortgage and title catches on, that would be additive to that gross margin, or accretive to that 10% gross margin target?
Yeah. So I think you're looking at it correctly, yep. Tom. And truth be told, our attach rates are pretty small yet. We've one of the benefits that our agents get at eXp is that they're being independent contractors. They're the ones that select the service providers that best serve their clients in their particular markets at that particular time, and we believe we've got a great product offering, but we're proving it with our agents, just like any other provider. And so the number of actual contracts and deals going through those still pretty small, but we're bringing in additional leadership specifically into that. I know that even RJ has taken a meaningful role in helping us drive that. We've got some senior, really strong icon agents that have built large teams, top 100 teams in the country that are looking at or involved in helping us evangelize and to help us position those to be truly value add to the agents and brokers that want to use those services. So we're really working on a number of different fronts to increase that attach rate. But the other piece, and we'll certainly have more information on this probably later July, August, is we still have as part of our plan to actually build out our own portal for the country, and with that, once we can start to actually work with the customer journey and help them even at the search level, we can also pre-position a number of those offerings in a way that enhances the consumer experience, so the agent isn't having to spend as much time trying to figure out if their buyer is pre-qualified, or for them to actually understand the closing process that takes place through title and escrow. And a lot of that can be facilitated because of our relationships and our joint ventures in those spaces. Yeah,
that makes sense. Around the kind of the portal there. So I was going to ask this question in a couple of minutes, but I think I'm going to ask it now, just because you guys have a lot of, you've got a core business that is growing very quickly, now profitable. You're generating cash, but you do have all of these other very exciting large market opportunities you're going after, investing in international. Sounds like there's something you guys have in the hopper for commercial real estate, which I want to touch on in a sec. Building a real estate search portal probably is a pretty expensive thing. Just curious, how do you guys feel about access to capital and having the capital to fund all of this stuff and kind of continuing to invest in the core business?
I'll take that. So if you look at the cash flow, Tom, it continues to grow even with substantial buybacks. And how we're building this, I mean, if you take commercial, for instance, we'll build it. We're not going to go into any of these businesses if it doesn't work for our model, our core model. So obviously rev share is a big piece of our core model. And so when we look at commercial, we want to pretty much take the same model into the commercial space and grow a very similar way we grew on the residential side, knowing it is a different business with different skills. And that's kind of why we're taking a different approach on it. But using the core model, we think we can scale commercial, comparable, not with the exact same numbers, but comparable to the way that we scaled residential as it picks up and we get the right team in place. A lot of the things we're doing on the international side is the same thing. So, I mean, we're not going in to buy any brokerages. We're not acquiring brokerages anywhere internationally. All right. We're making an investment to get into a country, but then we're using our core model again with rev share, stock compensation. And, I can tell you on the international side, when all this stuff was going on with the virus, we kind of pushed pause for a while. And the feedback we're getting from Michael and the people in international is this is the time. They really think that this model can be great internationally. We're going to find out. We believe it's true, but we're going to find out. So I guess my point here is that we're not really spending a ton of money and a ton of investment in any of these things. We're using the model to fund and grow it. And I'd say on the Verabella side, what's been amazing to me, I was in software for about 10 years before previously to this. And the huge difference between this company, Verabella, and any other company I've been involved with on the software side is that the product was well established with a great customer way before we took it commercial. All right. In most software companies, you're trying to build the product to catch up to the commercial expectation. Here, we could, if another eXp came in today, probably get them up and running next week if they're going to use a similar world that we're using. So that's how scalable it is. So that's why the investments really aren't the way that Glenn's built the business. They're not overly material. At this point in time, that could change if there's an opportunity. But right now we feel very good about the capital structure and being able to fund the growth that we're looking at.
Okay, great. I show about 5-6 minutes left. Maybe we'll see if anyone in the auditorium who downloaded the software wants to ask a question. If not, I got a couple more on Slido and a couple of my own for the last couple of minutes.
And feel free to open up a mic and if you want, and ask from the audience.
Hey guys, this is Alec from J. Goldman. Can you guys hear me?
Yep, we can hear you, Alec.
Yep.
So, with regards to the change that you guys made to the revenue share structure at the end of last year, clearly it's been pretty accretive to gross margin. I guess we've called around and it seems like what's effectively a price increase was pretty well taken by the agents. People understand that that program had become out of whack over time. I mean, does the fact that you were able to increase price successfully and not really cause any agent churn increase the likelihood that you could increase prices on other products or even just, core splits in the future? Thanks.
I guess I don't believe we could. We're very aligned with our agents and brokers, meaning that to a large extent we referred to ourselves for a long time as the agent-owned cloud brokerage, and we still operate from that perspective that we're really in partnership with our agents and brokers. And given that they're also shareholders in the company, we want to run it in a way that makes sense, so that we ultimately, our goal is to sort of achieve major critical mass of the brokerage, and we think that with that, ultimately allows us to move into a lot of these other services, whether it be mortgage, title, escrow. It's certainly helping us on the Verabella side. We think there's a whole bunch of additive benefits that doesn't require a quote unquote price increase on our agents and brokers. So we're able to the big thing was, how do we grow the real estate brokerage so that it's long-term net profitable, which I think we're there. And I don't think that it's going to need a bunch of changes, but internally, the reason why we were able to sort of achieve the lack of significant churn in the changes that we made is because our agents understood why those changes were necessary. So if we were not profitable and it showed up on our books and we could show why we weren't profitable, our agents would reluctantly agree to a price increase. But as we've sort of got to net profitability, I don't think that partnership. I think that partnership would break down if we start to sort of play with the numbers further.
Got it. And maybe just one quick follow-up. Could you just comment on where the gross margin of the core brokerage business is right now, or maybe in the first quarter relative to Verabella and the attached businesses?
Yeah. So go ahead. Go ahead.
No, you go ahead. Go ahead.
Yeah. So most of our gross margin up until even through Q1 was almost all core brokerage. Verabella was such a small percentage of our revenue that it didn't even move the needle at all from a gross margin perspective. On the Verabella side of the business, however, if we actually break it down, we've got a business that's generally 50% plus in terms of gross margin, and of course that's being heavily reinvested back into growing out the core, adding additional products and services, and then even eXp's investing into the Verabella platform to continue to expand it. So even though it does have a gross margin component, it's still something that we're heavily investing in over the short run to get it to a critical mass where it can ultimately sort of stand on its own as potentially its own entity at some point in the future.
Got it. And then within the core brokerage, could you break out like where splits are relative to the gross margin of things like mortgage?
Again, mortgage hasn't really added a lot yet to the mix, but the mortgage, the way that we positioned it with our Intraland First Cloud platform is, generally speaking, we're going to, on each attached mortgage, and this would be the way it's structured, I think it flows right in as sort of almost as a gross margin number. But we would generally earn anywhere from $300 to $600 per closed mortgage to any of those transactions. So it effectively will close to double the effective net of a transaction for each attached mortgage. And similarly, on the title and escrow side, it would add a similar amount of additional revenue to each transaction. So again, if we attach the mortgage and we attach the title and escrow on a per transaction basis, assuming that we're somewhere around the $300 to $600 average per transaction on the real estate brokerage side, we would add a similar amount per attached product.
Got it. Thanks, guys.
Great, guys. We're running up on time, but I want to slip in one more here from Slido, which I thought was interesting, Glenn, and then we can end it. But what is the cost of advantage of Verabella over, say, Zoom or Slack for a real estate brokerage? Why can't RE/MAX, for example, achieve similar cost advantages using those other tools?
Yeah, I mean, I just like when I started off, Tom, Zoom is a communication tool. All right, and it's great. Obviously, the valuation's unbelievable, but we run our entire business. So to do a cost comparison between using Zoom and Verabella, you'd have to take your entire operation, your accounting, everything you do on this platform as opposed to a communication tool. So it's really a lot of people do compare it, but we run our entire global brokerage on this platform. To just communicate through the platform.
Yeah, and I would I think as I process that question as well, the thought that the reality is that a brokerage could achieve similar cost advantages if they use those tools, but they wouldn't achieve the collaboration, and that's really the difference. So you can save some money by using those tools. Lots of companies are doing it, but they're going through Zoom fatigue, and they're not really able to have the serendipitous water cooler conversations that exists in a physical space in a virtual way. You have to spend time reading lots of messages and sort of trying to. It's taxing on the brain to use those tools. They're great tools. I use them quite often, but this one, it creates a collaborative infrastructure that's really hard to duplicate. And as a result, I mean, that's really what has been the lift that we've had, is the ability to actually have real serendipitous, meaningful conversations. And what I termed yesterday when I was on the CNBC interview, deep collaboration. That's really key. The ability to sort of go from work group to work group and conversation to conversation and be able to be a fly on the wall and a key contributor, at any given time in any given group, and be able to sort of do that organically. We were just working on our QBR here the last 3 days prior to Tuesday, Wednesday, Thursday, and literally, like, Jeff and I are walking from work group to work group, having conversations with the teams as they're working on various plans. You could never do that in a Zoom / Slack setting. You can get some elements of it, but not in the way that we've been able to do it, in a way that is less taxing and allows you to actually bring your whole self to the conversation that's going on.
Great. Well, the other nice thing about it is that I get to be the same height as you, Glenn, in the Verabella virtual world. So I'm gonna pass it up to you guys and RJ for any closing comments. But I just want to say thanks again for doing this, and I look forward to seeing you guys hopefully in the real world soon.
Awesome. Thanks, Tom. Appreciate
Thanks very much, Tom. Really appreciate it. Thanks for everybody for coming.
RJ, any closing comments?
Sure. Great. Thank you very much for everyone for attending, and really looking for feedback on if this format works well. As one of the questions is up there, the potential for earnings calls. Like, this is an environment that, given how this works, it might be an ideal one for us to use. So again, thank you all for attending, and we'll see you all again soon. Thanks much.
Thanks, RJ.
Thanks, everyone. Anybody who's still